Hello everyone, welcome to BISP Solutions. BISP Solutions is a tech company that provides technical solutions across the world. So today we are not here to talk about complex financial theories or big corporate jargons. We are here to talk about our business, our money and our future, right? So if you guys don't understand how much you are earning, how much you are spending, and how much you need to save or invest, so you already understand the basics, right? So this webinar is all about making finance simple, useful and practical. So whether you run a shop, provide a service, manage a household budget, or plan to start something of your own, we will take you through easy concepts like how to know if your business is growing, how to understand returns and profits in simple terms, and how to use financial modeling as a tool, just like a calculator, to make it better decision, right? So sit back, relax and enjoy the journey where we will be connecting finance to our daily life with some examples and stories and lot of clarity, right? So let's begin the exciting session of turning numbers into powerful business decisions. Before moving ahead, what we have covered in our previous sessions, we have covered return on market, average return, dividend yield, intrinsic growth, and common size statement and case study for the same. So we have done all the examples for each head, and in brief I have explained you all for these topics. Now moving forward, for our today's agenda is intrinsic growth rate, where we will be understanding in deeper sense what is intrinsic growth rate and how it will help us, and also we will be understanding common size statement little bit in detail so that we can prepare common size statement, and we will be preparing them both from scratch. So let's start with our topics. First is our intrinsic growth rate, as we have seen. So this is the natural rate at which a company can grow using its own earnings without taking extra loans or equity, which we have discussed in our previous session also. So for that calculation, the formula is intrinsic growth rate is equals to return on equity into retention ratio, and for calculating retention ratio we have to do 1 minus dividend payout ratio. After that, for example, so our return on equity is 15% and company pays 40% as profit and they retain 60% from that particular amount. So our intrinsic growth rate will be, how it can be calculated, I already told you all that we will be multiplying our ROE with our retaining, so it will be giving us 9% of intrinsic growth rate. Okay, now moving forward, why it matters. So it tells you if the company can grow on its own or does it always need loans and funding for growing, or a company with a good intrinsic growth rate is financially healthy and self-sufficient. Next comes our common size statement, where to make every financial item like rent, salary, profit, etc. easier to compare by expressing them as a percentage of total sales or assets in the case of balance sheet. So why we prepare it? So it helps us to compare how much we are spending on or earning relative to total sales or assets. Even if the actual numbers are small or large, this is very useful to compare our business with other businesses, no matter the size. So there are two types of common size statement. One is our common size income statement and another is our common size balance sheet. So why it matters? So let's say Ramesh friend runs another shop with 5 lakh rupees of sales and earns 30% of profit, right? Even though Ramesh earns more money like 2 lakhs, his profit percentage is lower than 20%. So common size statement shows efficiency, not just amounts only. We can compare with others and track year-to-year performance and spot which costs are increasing or not, and also find areas to reduce wastage. So that's why common size statement is required. Then comes our example for the same. So if our sales is 10 lakh rupees, and if we are buying a stock which is of 6 lakh rupees, so instead of just writing 6 lakhs, we show it as cost of goods sold. This is our cost of goods sold, because we are calculating that it is 60% of sale. So you will be wondering that how 60% of sales. So what I have done over here, I have divided my 6 lakh, which is my buying of stock, I have divided it by sales, which is 10 lakh. So it is 60% of sales. So now it's easy to see how much of our sales is being spent, right? So like that only, our sales is 10 lakh, so it is 100% of sales, right? If we purchase something, let's say we have buy a stock, so it is 6 lakh rupees, so our percentage of sales is 60%. Salaries we have distributed is of 1 lakh rupees, so it is 10% of sales. And rent is our 50,000, so it is 5% of sales. And net profit, if we calculate it, so it is 2,50,000, which is of 25% of sales, right? So this is what our common size statement will make us understand what it means. So what it shows, we are spending 75% of our sales on cost and keeping only 25% as profit. So if profit percentage goes down next year, we will know immediately something is wrong, right? Then what is the purpose of preparing common size statement? So our first purpose is to easy comparison year to year. So if our sales double next year, we can still compare expenses as percentage. So our sales is 100% and year 2 is also 100%. And purchases in year 1 is 60% and in year 2 it was 62%. And salaries in 1 year, first year is 10% and year 2 was 8%. And our profit was in year 1 was 25% and in year 2 it is 20%, which is decreased by 5%, right? So we earned more money but our profit percentage reduced. Maybe our purchase cost increased. Because of that also we can assume that our profit percentage can be decreased, right? Then our purpose 2 is comparing with other businesses. So we have 2 shops and they are owned by Ramesh and Suresh, so their profit percentage is 25% and 35%. So if Suresh has less sales, he is more efficient. This helps identifying who is managing costs better. Then purpose 3 is identifying problem areas, which means if electricity suddenly goes from 2% to 6% of sales, so we will now know to check wastage or leakage if there's any, right? So it helps in cost controlling and setting budgets for particular area, right? So why do companies require it? Like common statements, why companies require it? Because companies must track performance, justify expenses to investors, compare with industry, spot hidden issues. It's like a health checkup report in percentage format, easy to understand at a glance. Okay, so for example, our rent is 8% for branch A and our branch B is 4% of sales, right? And our staff salary is 15% of sales and 12% of sale. And our profit is 20% of sales in branch A and for branch B it is 30% of sale. So we can say branch B is more efficient even if total sales are lower than branch A, right? So what we get out of this while preparing? So when we prepare a common size statement, we get which costs are eating up our sales, what percentage of income is retained as profit, where to reduce costs to improve margins. It helps in comparing past years or competitors, and it is useful for investors and decision making, right? So let's take a case study for the same. If we are running a tiffin service and we make 1 lakh rupees per month, right? And our food material is costing around 50,000 rupees, which is 50% of our sales. Helper salary, who help us preparing tiffins or food, is 15,000 rupees, so it is 15% of sales. And gas and electricity is used, which is costing around 5,000 rupees, so it is 5% of sales. And profit we get is 30,000 rupees, which is 30% of sales, right? So by turning these into common size statement, we now understand where we are spending the most, if our profit percentage is good enough, and if other businesses in our area have better cost control or not. So now let's do some actual common size statement practice. So we will be moving forward with our same sheet where we have discussed in our previous session about our returns on market, where we have taken returns from primeinvestor.in site. We have taken Nifty's data for past 20 years, and we got our average percentage and our dividend yield, which was written over there only, which was 1.29%, and our total market return for return on markets was 15.33%. Right now we will be preparing our common size statement. First of all, what we will be doing, we will be writing our headings, particulars, and now what I will be doing, I will be clicking on equals to, and I will be linking it with my data sheet, and Control+C and drag it till the end. So we got our data over here, and we will do a small formatting over here. We will just give a bottom border over here so that it will look good. Right now what we will be doing, we will be linking our profit and loss statement like this, Control+C and drag it till the end. So it has taken dividend amount, we have to check, yeah, it is correct. And also we will be taking EBITDA too, so we have to move forward, right? So why it is giving a 0? Because in data sheet there is a space over here, so we can just do one thing, we just have to cancel it out. And okay, now what we will be doing here in common size statement, what we will be doing, we will be using our partial anchoring and absolute anchoring. So in preparing income statement, we will be using partial anchoring. So how to do that? Let's see. We will be clicking on equals to, then going to our data sheet, and over here I have selected sales. Don't do enter, just divide it by the same December 14 data and use F4 function to give partial anchoring and click on enter. So it is giving me 100%. Then what I have done, I have selected the data sheet and entered the same. So you must be wondering why I am getting 0% over here, because in my data sheet I am not having any data over here above EBITDA. So what I have to do, I have to check 32 is there, so my data sheet's number is 33. So we have to do some small calculation formatting, and then once it is done we can just copy paste it till the end. So this is how we prepare our common size income statement, by linking our data sheet data from our common size statement. Now we want our balance sheet to be prepared, right? So what we will be doing, we will be again doing the same thing, equals to data sheet, and we will be clicking our equity share capital and Control+C and drag it till the end. So it is giving us these, so we don't want this as they are not been calculated in our part. So what we will be doing, we will be differentiating them by doing some little bit formatting over here. Okay, so here I will be writing total liabilities and everything will be in like this, and total will be removed. Here it is total assets, because we will be doing total, or we will be calculating from this only. So what we will be doing, we will be, okay, so here it is all white, so we have to change it, right? So equals to, again going to our data sheet, and total divided by again F4, only 60 number is, like this total liabilities column is anchored. Apart from that, it will be moving from December 14 to 16, 17 and 24, and done. Control plus C and drag it till the end. Now we want it in percentage, so what we will be doing, yeah, like this. So now we will be doing equity share capital. So again going to our equity share capital divided by our, sorry, just a second, yeah, data sheet, and again the total and F4 and enter. So yeah, because of that only there was no numbers. So if we are doing it for balance sheet, we can do it for our income statement also, just to be more specific. And we have to understand our format. We want 2 decimal places. Now again what we will be doing, control plus C and drag it till the other liabilities. So it will be giving us the data for total liabilities. Right now we will be doing total assets. So in my data sheet I have already calculated my total assets, which will be divided by itself, and F4 for partial anchoring, control plus C and drag it till the end. Right, we can use the same data or calculation till our investments. So it is done, and 2 decimal places we want. So why it is taking, okay, just a second. Again data sheet, net cash block, right, and total assets are this, and F4, done. Control plus C. It might have taken something else, so that's why it was showing 0% previously. Now if I want to other assets, so we will be going our data sheet and other assets divided by total assets, F4 and done. Control plus C and done. So total is already above, right? Again equals to data sheet and receivables divided by our total assets, which is F4 for partial anchoring, and this is done. So it is a very easy task to do, yet very much prone for mistakes. So you have to check again and again if there is anything you are missing out on calculation. So this is how we make common size income statement and common size balance sheet. So Today we saw how numbers tell the truth, not just about how much we earned, but how smartly we earned it. Whether it's return on market, dividend yield, or even a common size statement, these tools help us look beyond income and focus on efficiency, growth, and smart decision making. The goal of financial modeling is not to confuse but to simplify, to make us aware of what is coming in, what is going out, and what can we do better, right? So remember this, you have to pay attention to your numbers, your sales, your cost, your profits, and your decisions. Start small, take 1 hour a week, make your own simple common size statements, compare, analyze, and improve. With every financial decisions you take wisely, you are not just running a business, you are building your future. Thank you for being a part of today's session. Let's continue learning, growing, and making better financial choices, because your numbers are your story and you are the author of your success. See you in the next webinar. Until then, keep your calculations clear and your confidence high.